I'm sure all of you pay EMI in one format or the other for some loan which you've taken. And this EMI, generally you're paying in the first week of the month. And this is always the daunting number which one has to look at. Now, because it's daunting and it's a fearsome sort of a number and you have a negative emotion attached to it, we don't think that by understanding the logic of EMI, we could actually save money. And this entire video is to ensure that you understand how EMI exactly functions. How do banks arrive at that EMI number? So that by understanding what to tweak, whether to reduce your repayment period, when to prepay, when to reduce your EMI or increase your EMI or increase tenure or reduce tenure, or switch banks to reduce your interest rate so that your EMI goes down. All of these hacks will only be useful if you understand how EMI fundamentally functions. And in this video, I'll take you through the complete understanding of that EMI. Hi, again, I'm Mangesh Sope. I'm from Peaceful Loans. We help customers like you have a very peaceful journey of getting the best home loan for their particular need, be it you're self-employed, be it you're salaried, be it you're from tier 1 city, tier 2 city, tier 3 city, wherever you come from, whatever be your need when it comes to home loans, we're there for you. Let's deep dive and try and understand what is EMI really. EMI is equated monthly installment. Now it has two distinct parts which sums up to become an EMI. One is the principal repayment. That means if you've taken a 1 crore rupee of home loan and in this EMI it is 17,000 rupees which is going towards the principal repayment, then your overall principal of the loan will reduce by 17,000 rupees. The second part though is the interest to be paid on the loan. Interest is largely the income of the bank and principal repayment is return of the capital for the bank. Now this EMI is a constant number for the entire tenure of your loan, which is a mathematical jugglery which the banks have done to ensure that a big loan can be repaid with small piecemeal sort of payment every month. The real magic is when you look at the amortization schedule. Amortization schedule is nothing but for the entire, say, 10 years of loans into 12 months, that's 120 months. In each of the month, how much is the principal repayment and how much is the interest component of this EMI? If you look at it and observe it very carefully, you will realize in the initial part of the loan, you are actually paying large chunk of interest. And in the latter half of the loan, you are actually starting to repay your principal in a larger way. Understanding this amortization schedule and how this works is where the magic lies in terms of saving your money. Let's first deep dive into how this amortization schedule comes, what's the mathematics behind it, and then utilize this to ensure that we save a lot of money for us. Now let's look at how EMI is calculated. By understanding this in depth, it will give you superpower to save a lot of money. Now, any person who takes money in form of loan from a bank or a financial institution who's not aware of how EMI functions thinks that if I've taken 1 crore rupee of loan and my interest rate is say 10% per annum and it's a 10-year loan, I should be paying back the bank 1 crore plus 10 lakh rupees per year. That's essentially 2 crore rupees of entire repayment over the 10 years. That means 2 crore rupees divided by 120 months, which is 10 years into 12 months, should be my EMI. But that's not how EMI calculation works. And that's where when you see, say 2 years, 3 years down the line, that how much of that 1 crore loan is spending, you'll be shocked to see you still have to pay 95 lakh rupees or 92 lakh rupees, 93 lakh rupees. And then you look at this that, hey, I've been paying this 24, 36 EMIs in a row, but my principal repayment is very tiny. And that's where this understanding becomes very, very important. Currently, either you would be going to some bank's website or some other loan-related website to figure out this amortization schedule by plugging in principal, outstanding, tenure, interest rate of the loan, and it gives you a table, which we don't bother to look at except for the fact that banker had promised me an EMI of XYZ number. Is that number matching? We don't really get into that mathematics. Or anybody who's mathematically savvy would want to understand how did this EMI specific number of say 46,616 came from, right? You can refer to this complicated formula on the right hand side, which will get you to that exact number if you plug in your interest rate, principal and tenure. It will be the same number, but it will never help you save money. Now, what's important is let's just break down this amortization schedule, which you're seeing on the right hand side, and let's just look at only one single month out of this. For this calculation, we look at month 1 of the loan, right? In this, if you could see, there is a principal outstanding in the beginning of the month which stays at 1 crore rupee. If your loan which is running at say 10%, that means your interest rate per month is 10% divided by 12, right, into 1 crore rupee. That should be your interest applicable for that month. And voila, if you see in your amortization schedule, the number matches to this interest rate. If you see it for the next month, you'll realize the interest component which you pay, which is part of that EMI, is always the simple interest for that month based on the interest rate applicable on your loan and the principal outstanding in the beginning of the month. That essentially means because your principal outstanding is a big number in the beginning of the loan tenure, obviously the interest becomes the larger part of the EMI which you pay. Now, if your EMI say is a specific number, then EMI minus this interest applicable for that particular month is the only amount which can be used towards reducing your principal amount. And hence you pay lesser amount of principal in the beginning of your tenure versus the latter half of the tenure. Now this understanding is something which will come in extremely handy when we look at multiple mechanisms of saving money here onwards. So keep this in mind, that interest applicable for that month and all the months onwards is simple interest for that particular month on the principal outstanding. And the remaining part of the EMI is utilized in reducing the principal outstanding. I promised you in the beginning of this video that I'll teach you mechanisms of saving money. Now the first mechanism of saving money is partial prepayment of loan, right? Now it's always a battle in a consumer's mind that if I should prepay it in the early part of the loan, should I repay it in the later part of the loan? Logically speaking, all of us know that our compensation, salary, financial positions improving day by day, year by year with the higher salaries, with the higher profits in the business. But does that mean that I should delay the prepayment of this towards the later half of the loan, or should I actually try and squeeze myself and ensure that I prepay in the early half of the loan? We've put together a table for you to understand on the right hand side. Here what we've done is taken a 1 crore rupee of home loan at 8.5% and assume that a person gets 5 lakh rupees of bonus. And now we're deciding whether I should use this bonus to go for a holiday or I should prepay this loan, right? If I prepay this 5 lakh rupees of loan in the year 1 of this loan, 10-year loan, then I actually land up saving 7,28,000 rupees on the interest cost. Whereas if I do that in the 10th year, I only save about 30,000 rupees. That essentially means you have a chance of saving almost 6,98,000 rupees by prepaying the same amount just by deciding the timing of it, right? Hence, the basic thumb rule which you should follow, if you have money to prepay, please prepay it as soon as possible in the tenure of the loan to ensure that the same money does higher amount of saving for you. In this case, as you've seen, you're almost saving 6 to 7 lakh rupees depending on when you prepay this loan, right? And if you're finding this complex, please reach out to us. Our team of experts will help you for your specific case to make that decision at that point of time. If you should prepay it at this moment or delay this decision, what would be the mathematics of this saving put together? Now let's look at the second scenario, which I'm sure you guys must have faced in recent past because RBI is reducing the interest rate as we speak. RBI has reduced almost 50 basis points, that's 0.5% of interest rate on repo rate. That must have had some repercussion in terms of reduction of interest rate for your particular loan. If that hasn't happened, please reach out to our team so that we could help you and guide you. Now, this is the scenario when banks ideally are supposed to reduce the interest rate of your home loan if RBI drops the interest rate. In such event, the bank will try and come and speak to you that, hey, the interest rate by RBI is dropped. Now, either we can ensure that we reduce your EMI commensurate with the drop in the interest rate, or we can ensure that your tenure is reduced. Which one do you want? And more often than not, people opt for reduction in EMI because that ensures that the cash flow per month stress which they're going through reduces. But if you were to look at the mathematics, for the same loan which we spoke about, which is 1 crore rupee loan at 8.5% with a repo rate drop of 50 basis points, a bank gives me these two options in the month, say 16th of my loan, then where is the total cost reduced for me? And as you can see in this pictogram or this information on the right hand side, that actually reducing the tenure and keeping the EMI constant is the way for you to save tons of money. So already we helped you understand how do you save 6-7 lakh rupees additional 5-6 lakh rupees saved in this ecosystem ensures that you can save almost 10 lakh rupee plus on a 1 crore rupee loan by just understanding how EMI function. See, very simplistically, we went through what exactly is an EMI, how it is calculated, how EMI is not just a mathematical jugglery done by banking industry to ensure that you pay a certain amount every month, but it's actually a very, very strategic lever in your hand to save lakhs of rupees. But the thumb rule remains the same. Whenever you have a chance to prepay as early as possible in the loan tenure to have the maximum benefit. The second is, if bank ever gives you a chance to reduce your EMI due to interest rate reduction, then please always opt for keeping the EMI constant and reducing the tenure instead of reducing the EMI. I'll also give you a pro tip here. You should always be in the market to look for reduction of interest rate. It could be the case that your CIBIL's gone up and hence you're eligible for now lower interest rate loan. It has the same impact as reducing the EMI or reducing the tenure, which we discussed. Of course, we'll discuss this at length in a separate video when we talk about looking for balance transfer from one bank to another. But so far, this is what we have. If you found this interesting, this is structurally helps you save a lot of money, then why don't you like and share and subscribe to this channel so that we can bring the similar content to you. And every time that content is there, you're alerted by clicking on the bell icon. Also, please share it with your friends and family to ensure that they can also take advantage of this knowledge and save money. As my father used to say, a penny saved is a penny earned, and that's applicable for home loan as well. Please enjoy our content and look forward to the next video to educate you on some other topics related to home loans.